If we miss the mark, we'll be back. We'll have some office hours for questions, either higher level questions or stuff that we maybe assume that you knew. We're assuming that you don't have much accounting experience, so if we're wrong and we underestimate your accounting knowledge, we apologize. But we just wanted to get some basics out there. You're not going to become an accountant after this. Just basic bookkeeping and records and tax stuff to be aware of. Just provide some knowledge. With that, I'll let Derek start off on the accounting side, and then I'll wrap up with all the good, juicy tax information.
So everyone situated with beers might help this a little bit. So I'm an audit partner, so I deal with financial statement audits, just with early stage startups, just to give you a little my background. So more dealing with technical accounting issues than the day-to-day bookkeeping, but some of the materials here that we're going to cover is more, the nuts and bolts of what you ought to be thinking about as you're starting your businesses. I've done presentations for companies that are in your phase and giving them tips on what they should be thinking about as they go out to raise monies. But this is probably a little bit even more basic than that. But certainly if you guys have questions as we're working through some of this or afterwards, we'll be around. So with that, please read that. Quick agenda, so we'll start with the accounting, bookkeeping side of things, and then Rich will cover some of the income tax issues to be thinking about. So, pretty obvious, keep good records, but I can't tell you the number of times I've met up with a startup, started down the path of trying to do an audit, and they just don't have any records, they don't exist. So, having a place to keep your records and knowing where they are is very important. You're going to be thinking about a lot of agreements, with...
How's that beer working out?
Yeah. Strong.
I like it.
I think it broke.
So you're going to have a lot of legal documents that you're going to have to retain, contracts, agreements, those kinds of things you're going to start entering into. Just make sure you have a place for them and you know where they are, and that they're signed. Another issue that I deal with quite regularly is nothing signed. So, do you really have a legal document, an agreement or not, if it's unsigned by both parties? So, it's something just to be thinking about. What types of records, financial records, so you're going to have equity agreements, if you're going to go out and raise money, you're going to have, articles of incorporation, you're going to have a whole thick book that the attorneys are going to put together that's going to have the preferred stock agreements, all the terms, arrangements, and the associated investor rights agreements. So you want to keep those somewhere secure. Contracts with customers, with employees, you're going to want to keep those very secure. Most companies have option plans that may be a little bit later, but you'll want to keep good records of who you're granting options to. A lot of times I'll run into companies that don't know what options have been granted. They don't know what their cap table looks like because they make promises to folks during the whole frenzy of building their business. They just lose track of it. So, a couple of years later, people are coming out of the woodwork once you're successful, asking for their shares, and it's good to keep good records of all that and have signed documents, who the people are that you granted options to throughout the process.
I was going to ask, when you say keep them secured, you're referring to well-organized PDFs of scanned signatures. You're talking about specific filing cabinets with locks on them?
In this day and age, secure soft copies, PDFs. When I say secure, you want to make sure that no one can access them inappropriately.
Yep.
And backed up.
Yeah, right. And backed up too is very important. Bank statements, you want to keep all your bank statements. With online banking these days, I think that's a little easier, and your banks can retain a lot of that information. Deposit receipts, credit card statements. We'll get a little bit more into this, but you might be using your own credit card or friends' credit cards or people's credit cards. You want to track that pretty well, because at some point you're going to want to get reimbursed for those expenses or know what that is and how you can get credit for stock in a company at some point. Because they're early stages, you're just trying to get your business off the ground and using your own money or friends' money. You want to keep good track of that.
Sorry, quick question. Does the line item transaction on, say, a credit card statement count as a receipt if I was submitting reimbursement?
It all depends on your policy, but generally it would be.
Okay.
As long as there's a business purpose, I think you're fine.
Sure.
And these days, especially with electronic records, there's more detail.
Usually says what it is.
So, if it's lunch, if it's dinner, you're supposed to say, all right, what the business purpose of it was. So, that you should be exercise a little more caution and stuff like that.
Sure.
Do you guys all know about this app called Expensify?
No?
Yeah.
Oh, totally revolutionized
Yeah.
expense reporting for me, yeah.
Expensify.
Yeah.
Yeah, Expensify is great.
And it starts free, so you can just get set up on it pretty quickly, and it retains receipts for anything under $75.
You can connect it to your credit card account, and it'll just automatically create expense reports from that.
And receipts.
And
Plus it has an
receipts, yeah.
iPhone
It's
app,
awesome, yeah.
which
And
is
then an
really
iPhone
cool.
app for entering manually paid for things and snap a picture of your receipt. It's,
That's great.
That's great.
and this has come from a guy who has a long career of just hating expense reports. I've lost so much money on that.
It makes it
Yeah.
fun.
Yeah.
So, what software do you use to do all the accounting? I think the short answer is QuickBooks. You know, it's cheap. Every startup I've ever almost dealt with has used it, and a lot of companies get to be pretty large and still are on QuickBooks. So it's usable for a long period of time. I guess the question is, are you going to maintain it, or are you going to hire someone else to maintain it? You know, that's purely preference. If you want to spend the time to learn it, the ins and outs, and how to leverage it to your best use, then I think that's probably the best way to go. But you could also get some rather low-cost consultants to help you out, you know, at reasonable rates to come in periodically and keep good records for you on the accounting software side.
Yeah, and the simpler you are, I mean, if it's just expenses at this point, it should be pretty easy to keep it up in your books.
Generally, check register of what you're keeping. So, you know, Excel worksheets, those are good for tracking, you know, equity instruments options that you might be granting. But I wouldn't recommend, you know, bank reconciliations, you'd be using that most likely, but you can also use QuickBooks for that. The online versions are good too if you want to use those instead of the licensing versions. You know, payroll, I don't know what you guys are thinking about for your payroll. If you're already, sounds like some folks are using Intuit or Paychecks, which, you know, are both good if you can figure out how to do it efficiently. So what type of reports? You know, these are the very basic financial statements, you know, used in the business world. I think it's pretty common income statement. I guess the question is, are you cash or accrual? You know, under U.S. accounting principles, you should be under the accrual method. You know, a lot of startups just keep cash records, which is fine. You can always convert to accrual, and for tax purposes, there might be some benefits for doing cash early on.
A lot of the early companies are on the cash method. It's simpler. You kind of understand it. It's intuitive.
Can you quickly tell us what all those statements are and what accrual accounting is? I know
Sure.
2 years ago I had absolutely no clue what any of these things were.
So let me skip to the second one because I like to start with the balance sheet. And those are basically your assets and liabilities. So the assets are at the top or to the left, and the liabilities are at the bottom or to the right. But generally, it's, you know, you've got all the assets of the company: accounts receivable, cash, inventory, property and equipment. So if you're buying computers, that all falls into the asset side. The liabilities would be accounts payable. So you get an invoice, but you haven't paid it yet. Well, it's a liability or obligation. Accrued liabilities, so accrual accounting, you know, accrued payroll, so you haven't paid people their payroll because it's on a different cycle, so you have to accrue whatever you're owing your employees. You know, uninvoiced accounts payable would be an accrued liability.
Loans.
What's that?
Loans if someone.
Another liability would be loans if you've got outstanding loans with folks. On the income statement, that's your revenue, and then you've got your cost of goods sold if you have it, and then your gross margin, and then you've got all your operating expenses, general administrative, research and development, sales and marketing. And then the cash flow statement is the ins and outs of cash. So you've got cash coming in from sales, but you've also got cash going out. So that is a summary statement that just shows the ins and outs of where all the cash is coming in and how much cash you're basically generating or losing early on in the company. And then an equity statement is basically a roll of all the equity issuances: common stock, preferred stock, stock options that you value and expense, warrants that you might issue down the road. But in most cases, early on, it's going to be common stock and preferred stock.
So the cash flow statement and income statement might sound similar, but they are different because, you know, for income statement, even if you're cash basis, like if you buy a computer for accounting purposes, you're supposed to capitalize it and then expense it over time. And there's exceptions, but that's how the cash flow statement might be different.
Wait, which one is the one where you depreciate?
Income statement.
And the income statement and the cash flow statement there for a period of time, so it could be, you know, for a year, it'd be 12 months, so you'd report your activities for 12 months, whereas a balance sheet is as of a point in time. So December year end, you'd have a 12/31